Hello everyone, welcome to my stock market technical analysis channel. We're going to get right into the charts. Today has the opportunity to signal some major sell signals in really just the stock market in general. Doesn't mean it's going to play out, but the opportunity's there. I'm going to point that out. I want everyone to understand what I'm seeing. Let's get right into it. Do appreciate it. If you find value in the channel, let me know. Here we go. We're going to start out with the triple Qs because, again, this market has been all about tech. There's been a huge crowding into the FANG stocks. Everybody owns the FANG stocks. I mean, from the retail side, I know that's pretty much for a fact. Most people own it, and that's why a lot of people have felt like the market's, had this monster rally because it's been the tech stocks that have been doing that. And so the rally hasn't been in every sector of the market. Financials have been weak. There's been other areas, but tech has been the key to the market strength. And here's what we got on our chart. I want everyone to focus on. We had the sell signal right here on this hourly chart. If I go to the hourly, you can see we made this little up channel right here. When we broke that, it was a nice impulsive breakdown. That was your sell signal. That's where I got short right there. But it was just a short-term short because there was major support down below. And the major support, I'm going to point that out. But now that we see that this hourly channel has been broken, we can get rid of that. We don't need that anymore. And let's go to the daily now, because what's really playing out, or has the potential to play out, is a break of the entire rally that has been in play for all of 2020. This entire rally that we've been in is breaking trend as of right now on the daily chart. So you can see here this uptrend. This is the uptrend that the Qs has been in. Several reactions along this. You can see we've got reaction there. I mean, plenty of reactions to validate this trend line. And we're getting a nice impulsive breakdown. As I zoom in, you can see gap down and selling off. Now, if this can't recover and move back above, or at least close to the trend line, then that's a sell signal on the daily chart. And what that means is that this trend has now been invalidated or broken, I guess, with a nice gap down. The impulsive today, it gapped down and sold off a little bit, trapping in some money, basically trapping in the late to the party bulls. And that's what you usually want to see when you have a bear break, is to trap that late to the party bullish money. And that's what creates the continued selling, is those people that get trapped end up panic selling, pushing the markets lower. So if it really comes down to the daily close today, how does the day close? Do we close kind of down here in this area? If we do, that's a break of trend. The very first daily close really on this trend line, and this goes back to the April lows. I kind of throw out these points because this was just the impulsive wave down. But once the market got it, came back to order and everybody kind of got cooler heads, then it got more structural, and you can see it was just a clean uptrend from there, just a nice structured uptrend. So a breakdown here will be a break of trend. That's a sell signal. That gives that basically puts a bigger move in play on the daily here. And if we look at really where that could go, well, you've got this price channel. You can really see it on the weekly here. You've got this price channel here on the Qs. This is going back to the 2009 lows. So we're looking at 11 years basically of price action, and this is a nice clean up channel that the Qs has been in the entire time, except for here when you had the impulsive breakdown and the Fed saved the market, and again here when you had the impulsive breakdown in 2020 and the Fed saved the market again. And then we overshot to the upside. So when you're on the outside, though, when you're way up here on the outside of that price channel, that's a really low probability area that it's going to continue. A higher probability for a bull market would be come all the way back down, tag this bottom line support at some point in time, and then work your way higher in a bullish price channel. So this is your bull market. This is not broken as of yet, but to be outside of it is, kind of a blow off top. And, you'd want to see more consolidated price action moving higher in a bull market, not just a vertical move. So first things first, you got to go back to the daily. We've got the breakdown. If the day closes, then I would expect further selling. Doesn't mean it's going to come tomorrow. We might get some back test at some point. That's pretty, I think that would be maybe expected. And that would possibly be an area where you could add to a short if you took this breakdown. So, we could break here, confirm that the trend was broken. Then tomorrow they do a full back test, completely flush out anybody who is, got too heavy or took the breakdown. And then make the move down. That's kind of what I'm seeing. So first things first, got to see the breakdown and the close. Let's look at SPY here, and possibly some bigger trends are actually in play here. Now you can see, if I go to the weekly, this green line is the really important bigger macro trend. Really the big picture concepts that I really want to point out. And one of the reasons why I've been bearish on since 2018 is due to this green line right here. So this green line is your bull market in the S&P 500. And on this, we're looking at a weekly chart here. So I point this out all the time because I think it's so important for people in the next 10 or year to 5 years to understand these big picture trends, because these have the potential to really shape how the next 5 years are going to be. And here's your first reaction here. There's another reaction. We had several reactions right here. And then in 2018, we broke. That's your breakdown of the trend. This is when the Fed stepped in. So the bull trend was broken in 2018, and then the Fed has done all they can over the next few years, basically, since the break, to keep the market from, selling off, basically. So each rally here, 2019, was pretty much Fed-induced, and 2020 obviously is Fed-induced. So we have, a broadening wedge. But basically, this rally was really impulsive, but you can see we ran right up to this, this trend line, this green trend line, and tested it. We didn't quite test it from below. And so it stopped short, actually. And that's what I was saying in a couple of videos back. When everyone's looking at a trend line, it's either going to stop short or overshoot it. Now, everyone was expecting it to come up and tag that trend line, I think, because it was so prominent. Well, when everyone's watching it again, it stopped short. And so far, that's been impulsively rejected. Here's your week. We'll see how this week ends up. But if we do get those breakdowns on the tech sector, then we could be in for, quite a bit more selling this week. So we'll want to go ahead and continue to watch that. Now, we could obviously just chop around or consolidate in this area and then run up and do a back test and overshoot or something like that. That's completely possible. But the point is that I'm trying to make is the trend was broken in 2018, and now we've just had this broadening wedge. This broadening wedge pattern is a topping pattern. Now, it's played out over a few years, but it still doesn't negate the fact that it's a topping pattern. Yeah, there was a rally in 2019. There's a monster rally here in 2020, but that doesn't mean that the bigger trend is just continuation of the decade-long bull market. The decade-long bull market was broken back here in 2018, as you can see. You can see the negative divergence here as well on the RSI on the weekly. So big negative divergence. Again, markets don't go up like this. This is not bull market action to just go from the lows to the highs in a vertical direction like this. You can see from the very low up to the high in a matter of 154 days, it's gone up 63%. You can't really find any price action in the last bull, in the bull market for the last 11 years. Any price action that looks like that, except for off the March 2009 lows, is where you can see it at. So yeah, it's possible that we've started a new bull market, but there's been no bear market. So there's been no correction. There's been no clearing out of positions. There's been no real reversion to the mean. So to start, to have a bull market like this, followed by just a brief 1 month bear market, and then continue a brand new bull market, really low probability. The higher probability is that we had a bull market here, it broke in 2018, we've been topping out for the last few years, and now we get a bear market. Maybe we come down to 150 or something like that. I don't know where exactly, and then clear out for a little bit, consolidate, build a bottom, and then start a new bull market. That's a higher probability, I think, at this point. You just don't know exactly when the rally we've been in is going to end. Now, this candle right here, this is either a correction or this is the end. And so we have to sit there and continue to watch for information. And let's look at the dollar. You get the dollar right, oftentimes you get the rest of the markets right. And so here's the dollar. Looks like we're breaking out right here. We'll see how the day closes, but so far we've got a breakout. This looks good, and it could back test, but it looks good to run up and tag this up around 95, depending on when it actually gets there. Where will it actually hit? But looks good. Looks like we're breaking out to the upside. That's bearish for gold. And so gold, you see here on the daily, starting to break down. They're trying to recover it. So again, daily close is important. You can see gold's ramping up right up to this resistance. So does it get rejected here, or does it hold and close above? So ultimately, you got to wait for these daily candles to close. And so you have to really wait till the end of the day. You'll start to see where things look like they're going to close at. A breakdown should not close right near resistance. It should basically break down. You want to see a nice impulsive red candle down. Here's XOM oil. I like to kind of keep an eye on these just because, I think it's important to understand where oil is going. Oftentimes oil and the market trade in congruence. They trade together. So oil sometimes will make the move first. But here's XOM breaking down more. Here was your support, and now is resistance, 40.87. So kickback rallies to that look like short opportunities. If it recovers that and can hold, then this is a false breakdown right here. And that would be very bullish if you get a recovery and it can actually hold. So watch for a recovery of that. But if it can't and it just continues to, fail at this 40.80 level right around there, then that's resistance and it should continue to move lower. You've got your March lows right down here. Here's the absolute lows right there. And, from where we're trading right now, to get down there is about a 20% drop, which is pretty close compared to where some of these other markets are at compared to their March lows. So, again, this is ExxonMobil, but it is a big bellwether for oil. And if, what I'm looking for is them to finally throw in the towel and cut their dividend. And when they do that, you should see a big flush out of this stock. And that, I think, is going to be the opportunity to buy this thing and hold it for the long term. But until we get that, I think we head lower. Okay, KHC. I bailed on this one this morning because of the price action that I saw. I was looking for KHC to hold this 33.50 level. And you can see on Friday, it couldn't quite close above 33.50. It closed 33.47, I believe. And then today, gap down. I sold it right there. I figured there's no point in taking it down here. I'd rather wait for it to recover this 33.50. So at this point, 33.50 is a big level on this KHC because you can see here right there, lots of reactions. This black line, all kinds of reactions. It held as resistance for quite a while, and then it broke above and held as support right there. And so I was expecting it to hold again. I was looking for maybe a slight undercut like what we saw on Friday where it undercut and then recovered. And it just didn't do that. It went the other way. So that's pretty weak. To me, this looks like until it, if it can recover 33.50, then that would be bullish. But as long as it's below that, this obviously has the potential to, go a lot lower. So we'll watch this, see where we end up. You do have some support here at 31.50, so perhaps it'll hold here. But until it's really above that 33.50, I'm not too interested in it. So Tesla. So obviously I let everyone know I got short right up here at this, 470, right up. Basically, when we broke this trend line, you can see here on the hourly clean up trend line right there. Here's your nice impulsive breakdown. That was the short sell signal. And so far, playing out nicely. It is, from that breaking point, I mean, if you got short at the very breaking point, it is down 24, almost 25%. And, so to the upside, that is basically a 33% move up to get back up just to that breakdown point. But basically, 25% drop in just a couple days. And that's what happens when these things, this was a runaway stock, completely thrown out. It was basically a momentum trade. People were buying it, thinking it was rising. They were going to exit and sell it to someone else, and everybody plays the same game until things reverse, and then there's no one else to sell it to, and it all kind of reverses quickly. So still, I still see a potential uptrend right there. It's not that clean, but right about there. Yeah, right there. And so it looks like we're holding right in here. So I would, you can see reaction here, reaction here, reaction here. So you have 3 reactions. So we're down to this kind of longer term support. So if it can hold right here, then, this is still above support and not completely broken. So maybe a good time to pull out close out some shorts and wait for the next signal of a break of this trend. If this can't break, then we could easily consolidate or move higher over time before actually breaking. It will break at some point in time, obviously, but it doesn't have to be right now. It could be above the at all-time highs. We don't really know. And we'll wrap with the bond market. Always important to keep an eye on the bond market. Again, the bond market's 10 times larger than the stock market, so if you always want to make sure you know what's happening in the bond market so that you can anticipate maybe what will happen in the stock market. Now, the bond market has been manipulated by the Fed, so it's not as good of a tell signal as it used to be, but ultimately it's still important to see what's going on with interest rates and bonds. So here's BND. It's a bond ETF. It tracks an aggregate of bonds, but basically to me it looks like it's bear flagging. Really, you've got your flagpole here, you've got your flag that it's been making, and then it would project some kind of a move down to like 87.55 or something like that in bonds, and that would mean rates will rise, interest rates will rise. Interest rates rising is a bad thing for this market because this is a really indebted market, and so as interest rates rise, you would expect the Fed to come out at some point in time and announce additional stimulus, additional quantitative easing to buy up more bonds and keep the interest rates from rising. So if we don't get that and interest rates continue to rise, there could be some big problems just really across the board in markets here in the future. Oh, and I thought I'd cover the FANGs real quick. I know I said I'd wrap up, but these FANGs are important, so let's look at these. So here's your uptrend line in Apple, and we have broken down today. So if this sticks and we get some more selling and they're not able to recover that, then that's a break in trend, and so Apple should continue to move lower. Microsoft again broke. Here's your uptrend line, kind of the benefit of the doubt uptrend line I made in Microsoft, but we broke impulsively, hanging down here, not really looking like it's going to recover. But the days, we still have a few hours left in the trading day, but broken as of right now. Here's Amazon. Amazon has a breakdown here, but Amazon has major support sitting down here around 2,000. Going back to, I believe this goes back to the 2009 lows. So that's the bull market, but that's still 30% down. So we don't need to worry about that for now. For now, we'll just look at this uptrend line. It's broken. Google, here's an uptrend line that was broken there. So the FANGs are all below their trend on their short-term their short-term trend lines. So we'll watch for continued weakness or a recovery of that trend line. And that's all I got for this video. Appreciate it. Thank you, everyone. Catch you on the next one. Bye.